Hi friends, good week, good weekend. Vladimir here, and this is the weekly review for uh, actually the first official week of July. When I say official, I mean begins from Sunday as July. This is the 7th of July 2013. Last week was kind of quiet until actually Wednesday when we started with the moves. Thursday, before the US session, during the European session, we saw very bearish moves on the majors, euro dollar and pound dollar. And on Friday, thanks to the non-farm payrolls, which I will talk about a bit, we got a continuation of the move, and we got very, very confusing numbers. Now, let me just talk about the last numbers a bit. Theoretically, the additional 195,000 jobs to the market is pretty impressive. No, we all know that the U.S. market has to produce over 200,000 or even over 250,000 just to be in a real good growth, but it's still pretty impressive. And the unemployment rate remained 7.6. Now, Bernanke said not once that as long as the numbers of the unemployment rate are not getting closer and closer to 6.5, they will continue with the quantitative easings. The question is, with how big amount they will continue to do that. The speculations are talking about September or October actually to cut it. Will he? Now, from my point of view, Bernanke, as we know, most likely will leave his chair on the next January 2014. I don't think Bernanke wants to leave. The economy starting to show bad numbers. So in my point of view, maybe after all, if the numbers will continue this way, he will not do nothing, and the quantitative easing will continue until 2014, and then the next Federal Reserve will get all the fire on his side. Now, besides the pretty good numbers, there is something still very worrying. Just look at the next numbers. In June, right, the underemployment rate rose from 13.8 to 14.3. This is actually the highest level from February, if I remember correct, maybe even January. It simply means that one of around 7 American citizens who actually want to work cannot find a job. Okay, just think about it. More than that, most of the jobs created in June were actually part-time jobs. It's not a full-time job. Okay, most of them were created part-time jobs. Okay, the amount of the citizens, the amount of the people working part-time is now around 8 million. Those people are not working part-time, just because that's what they want. They simply don't have other way. They need money to survive. They can't find. They just cannot find other solution. So they have to take 1 or 2 or 3 part-time jobs just to survive. That's kind of hidden numbers. No one is talking about them, but they're really worrying. Okay, they're really worrying. So things like that tend to explode on some level. So from one side the numbers are pretty good, from the other, that's not the best. More than that, I will tell you more than that. Actually, on the last report, okay, most of the new jobs were actually low paying jobs. And most of them in the retail sector and on the hospitality sector. So again, the numbers are good and people find job, yes, but it's partial time job, not all of them, but most of them. And many people just give up of looking for a job. These numbers still let me be worried a bit. Now the biggest question is how it's going to affect the market. For long run, I have no doubts it will affect. And as I said, things like that actually explode on some surprising level when no one expects them. You know, like the bubble in with the house prices in 2007, 2008. Back to the forex market. After talking about the numbers, for long run it will most likely show its effect, but for short run, it seems that we have several opportunities coming this week. And actually, I have some new great things to follow. And I do think that, well, I will also, of course, talk about the pairs we were following for the last several weeks. So you know what? Let's start. Okay, I will cover it all. This is the euro pound. As you know, my opinion. I was talking about this range not once. I still think it could be treated like an inverted head and shoulders, which tries to break up. Seems that the pair wants to break it up, especially on the last Friday. Okay, it did break above this resistance. Now the only question is, can it hold it? Okay, on the 4-hour chart, it's pretty impressive bend to bend move. The biggest question is, what's from here? Retrace to the full way down, or alternatively, we will see some pullback to retest the broken level and continuation to the next levels. Watching on a weekly chart, my point remains bullish. I think we can go for double top, which is around 087, 088 range, to create a divergence right there. Or we can try, even within several weeks, try to rise up to 090, just to continue with this divergence forming, and right from there start huge down move, actually changing the direction. It will be very, 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 very interesting. One of the things contributing this up move, the expected up move, from my point of view, is actually Carney. The chairman of the England Bank, who came from Canada, actually is very, very respected one, and his job is clearly to devalue the pound. It's actually, we all know that 2013 is world war of the currencies, right? Every country is trying to do the same, and he declares clearly on the last Thursday that that's what they're about to do. Okay, that's what they want to do. Now, that should contribute this rise. And in other words, just to make it simple, as long as it holds above 085.80, I would even say down to 085.50, as long as it holds these levels. My opinion for the euro pound is very bullish, and I think we can go up to 087, 088 as for the beginning. For that potential double top, and maybe even 090. So I am bullish for this pair. This is my opinion here. And if I talk about the euro pound, let's take a look on the pound dollar, which is trying to break this support area. Actually, there is one thing to pay attention to. After all, and with a huge surprise, it still could be a double bottom, right? There is a divergence, a potential divergence, forming on every indicator. That's a beautiful support. Everyone expects down move because of Carney, and that could be a trap. I don't say it will be. I just say keep it in mind, because we know that when a picture looks too clear for everyone, things tend sometimes to go exactly the opposite. That's what's happening with the pound after last Friday. Now, if it ends within 1 or 2 weeks, like a bullish candle pattern, and MACD turns up, that could be a bullish sign for the pound dollar. Okay. In other words, this 148 has to be broken in order for the pound dollar to continue. In case it's broken, it opens the doors for the bears to continue all the way to the downside. Now pay attention for this interesting move. Okay, you see that? The duplication takes us pretty much to 142.50, 143. That's where I expect the pound dollar to go if it actually successfully breaks below this 148, which tends to be very stiff support on the last period. Okay, many times on the past. 148 broken, and I think 143 is taken. 148 holds, and I think it might be a trap, and the pound dollar can rise back 400 or 600 points right from there. Okay, so watch it clearly on a daily chart. Oops, sorry. On a daily chart, we can see clear move, band to band, broken trend line at the 151, which I was talking about. Break below that will open the doors to the downside. Right, all looks bearish here. Now theoretically, not theoretically, every pull back should be sold. Okay, but keep in mind again about 148. I do see a fight around these levels. So what's about the euro dollar then? Watching on a weekly chart, looks like the same story. It wants to go lower, and most likely it will try to go lower. But for that, of course, it still needs to place itself below this trend line. If you remember, I was talking about this head and shoulders a few weeks ago when it was here. Okay, since then it just seems that the euro dollar just rebuilt this shoulder. It still has to be broken, and if it does, euro dollar should lead lower. And I do think if it breaks it, that's the level where we'll aim. That's around 122. Draghi also said he will continue the same way easing purchases, and it means most likely the euro dollar will push the downside. Watching on the monthly chart, I still think euro dollar is going down to 122 or something like that again, but there is a divergence waiting for this move. It will be extremely interesting to follow what's going to happen since then. And from my point of view, the euro dollar is creating on monthly chart something very, very interesting, as you can see. Okay, as you can see here, 1, 2, 3, 4, 5, 6. Now we might go for a break of a 7. So we could go and retest this zone and break it down all the way, or alternatively retrace from here and fly to new highs. Fly to new highs. Will be extremely interesting to follow how it's actually working, right? In my point of view, I bet to the downside. That's why I would say take a look on the 4-hour charts. Okay, that's the bullish divergence. Every pullback and a bearish divergence you have, just go with the sell. Yeah, just go with the sell. Euro dollar should continue and aim lower. Okay, that's my opinion here. Dollar Canadian, which I was talking about also in the last week. You remember my opinion. I said I am very bullish for this pair. 106 should be taken. I still think it's able to go for 107. It seems like creating a new high. It seems like holding this uptrend here on this channel. Watching on the 4-hour chart, there is kind of a divergence here. So a pullback down is acceptable. From my point of view, this level, 105, has to hold now, so the dollar Canadian can continue higher. 106.30 should be the target, but I do think the final will be 107. Why? Simply because of this monster resistance on the weekly chart, and maybe even higher, just to create weekly Bollinger Band duplication, which should be around 108 plus. So I do keep my bullish opinion on the dollar Canadian as long as it holds above the 105, even 104.80. Every pullback down is an opportunity to buy this pair. I'll continue. My next pair on the list is the dollar yen. I was talking about this pair a lot, and it seems like it broke this 99.50 100 level successfully. Watching on the 4-hour chart, there are a lot of bullish signs. There is a beautiful trend line right now, okay, right here, as you can see. Um, so, and it breaks just the Bollinger Band. So I would say dollar yen should go higher. But pay attention to this line. Okay, this is the new angle of the line. There is a divergence here. Dollar yen could retrace down to this zone. As long as it holds above this trend line, my opinion was and still stays bullish. I do think dollar yen is going all the way up to 103 again, and I do think it's going all the way then to 105 and then to 110. This is my opinion. But weekly chart ends like a marubuzu. Okay, just let me erase this line. Where is that? What's wrong with this line? Okay, ended as a marubuzu. Daily chart still has a bearish hidden divergence, and the 4-hour chart still has a continuing divergence. But there is a trend line, as I showed you, that has to be broken in order for the dollar yen start its down move. Anyway, I think the down move, if will come, will be very limited, and this will be the maximum target. Okay, this trend line here. So as I said, I keep a bullish opinion as long as this trend line holds. If it will be broken, I think we are able to see dollar yen reaching again 99, and then break below 99, and we're able to reach to see that 97 plus, right? 97 plus. But it's very important to remind this trend line has to be broken in order for the bearish move to happen. As long as it holds, dollar yen is able to go all the way to the previous highs. So pay close attention to this pair. I think it will allow and provide with some great opportunities. About the euro yen, my opinion actually did not change. We are still in a potential head and shoulders move. This resistance must be broken for the euro yen to fly to the high, and alternatively this trend line, the small trend line with the support, okay, unexpected support around 128, must be broken in order for the euro yen to go to the downside. Pay close attention to that. This pair, a break above the levels or below the levels, should open the doors for the move. About the pound yen, same story. There is a support holding, okay, and that's right here, 150.50 actually, never was broken successfully yet. Okay, here it still there. Watching on the weekly chart, it's very confusing. From one side it's holding above 20 MA on the weekly chart, so it could easily rise from here to up to 160 or higher, and after all it's also able to make it break down and continue lower. As I told you not once, a break below the support should open the doors for the pair to move all the way to the downside. Okay, so play very, very, very close to that. If I have to bet on this stage, if I have to bet, I bet down, but that's yen pairs. Okay, we have to be prepared for both scenarios, and that's why we have clear levels for an up and for a down. Australian pairs. Well, Euro Australian created some very, very bearish candle on Thursday and creating a hammer on Friday. Watching on the weekly chart, we have double doji. My opinion was and stays still the same. This pair is able to go from here a bit higher, okay, 500-600 points higher, but the higher, the stronger the cycle will come after that, and this pair is able to go right from here down to 136 and start the rise all the way from there. So actually, I keep an opinion for a bearish move. Okay, we are on a real extreme, and watching on a monthly chart, I think it should play on this zone within 1, 2, 3 next month. So it's most likely will be ugly, and every new high from my point of view is just an opportunity to sell. For a long run, okay, for those of you who want just a long run, buy and hold. Okay, because based on the monthly chart, it's only this expected move is a pullback, then we will most likely continue to the upside again. This is my opinion about the Euro Australian. I keep the biggest opinion about the bearish move, the bearish cycle to come. It still did not make any of the bearish cycle, and it should, and most likely it would. And the question is when and how. And the same opinion I have, of course, about the pound Australian, which very convincing way created a beautiful down move to the lower band. I still think that this level is able to be broken, and right from there I think this pair is able to take us all the way to 159, which I believe will be a potential bottom, or maybe even 156 on this zone. And right from there I expect this pair to continue higher. Watching on the weekly chart, it's pretty impressive bearish candle, which means yes, we can go a bit lower. Even as I said about the Euro Australian, same about here, even if we do see new highs, I think they will be limited as we are playing around extreme, and around extreme every new high is an opportunity for a bigger cycle. So that's my expectations from pound Aussie as well. And there is one, if I talk about the pound New Zealandian, okay, watching on a weekly chart, watching on a monthly chart, my opinion is very, very, very bullish. I think the pair is preparing the bottom. It could be the bottom right here, and I do think this is great pair to invest in, and I do think pound New Zealandian will take us all the way to 206 first of all, maybe then even directly to 216, and at the end I do see this range again to 20 being reached. It's only a question of time from my point of view when exactly it's going to happen. Right now there are some problems with the pound because of Carney, most likely, but it's all temporary. Okay, so for long run, pound New Zealand is really, as investment, a great opportunity from my point of view. And it doesn't mean it cannot go for 600-700 points lower. Yes, it could. It doesn't change my opinion. I think for long run, that's what investment means. It should continue higher, more and more. Aussie Kiwi, what a pair, isn't that? As I told you not once, I think this pair is able to create a bottom. Try to create a hammer on last Friday on a daily chart. It's a morning star from one point of view, but from other that's a bullish divergence. Aussie Kiwi is able to start the move to the upside between 121.50 up to 123 as a target. I remind you the biggest. Where is that harmonical weekly chart? Okay, here. It's a classical harmonical pattern, and it's only a question of time where exactly from the square it's going to make a stop and push it all the way to the up. So in my point of view, this is another great pair to start to collect the bottoms, and every new bottom with the current divergence going on a weekly chart and on a daily chart and with the harmonical pattern, it's just opportunity to collect more to enjoy the bullish cycle to come. It does not mean it can't go first of all to 115 or so. Yes, it could, but as I said, from my point of view, it's only an opportunity to collect more. So that's about the Aussie pair as well, pairs we were following for a while. Euro Canadian, you remember my words, I told you not once, I think this pair is able to make a stop from 138, right? Right from here, or it could rise to 140, 142. It never did. It stopped right on this top and closed the expected low of the Bollingers. We can say target reached here. Right now, I prefer to stay neutral for this pair. Few words about the Pacific pair, dollar Zar and dollar Turkish. I think they both able to make another push from here. That seems to be a flag. Dollar Zar is able to make this up move all the way to 1060 or something like that. I welcome this move as on the next high it will be another great opportunity to uh, have another sell. This is classical investment pair. Why? Because they create extreme. On a monthly chart, there is more than 20 candles, right? Many resistances waiting for this pair on a monthly chart. Watching on the spike zone, as you can see here, it's able to go right here. That's around 11 even. Okay, it's able to do that. That's why we have to choose carefully our sells. Why it's classical? Because for long run, this pair will be traded to the downside. Because I believe that the South Africa will be more and more and more and more developed, and their currency will be more and more and more attracted, especially because they pay wonderful interest rate, and the swap by selling that is amazing. So every next high is just an amazing opportunity to increase the sales. Yes, we are able to push a bit higher, but just to hold this cycle on the next part of this year, or maybe the beginning of next year. Until then, just to enjoy the swap. It's amazing swap. Same about the dollar Turkish, which is playing, as you can see here, around the top. Okay, monthly chart is creating a bearish divergence. Weekly chart is creating extreme. Okay, and daily chart has heavy divergence. What else investor want? Okay, I watch for the clear weekly stop with extreme. It could be this week, it could be next week. Psychological 2, okay, psychological level 2 should be sold if there is a stop and false break above that or around it. Again, same story, it pays huge swap. So from my point of view, it's an amazing investment. I don't say sell every 20 points, not at all. Just attack 2, 3 positions, small positions. Enjoy the swap for the long run. And don't forget, swap for a long run on these pairs is extra percentage profit on your trade. Okay, that's very important to remember that. A few words about the gold and the silver. Well, my opinion did not change. I still think it's time to collect them. It does not mean they cannot push a bit lower. Yes, they still could, but the extreme playing right there already, and the monthly chart hidden divergence. Actually, divergences everywhere, extremes everywhere. I do think this is great to start to collect them, and from my point of view, it's only a question of several weeks maximum until they both create some beautiful bottom and start the retrace to the upside. I think it's time to collect. My opinion from the last week did not change. Few words about the indices. Playing around the 20 MA and retracing to the upside after last Friday. Pointing here some picture now. For long run, my opinion did not change. Okay, the pressure on a monthly chart is heavy, but, and here is a big but, Dow Jones is able to push for double top or even for a new high. A new high will create a new divergence everywhere. S&P, Nasdaq, and Dow Jones. It's still able to do so. Every new high is an opportunity to go for deeper sell. This divergence is a very bad sign for the US economy. I said not once, I hope that we will see a pullback to the 14,000 or something like that on the Dow Jones before the autumn, actually, before the end of the summer. I still hope it's going to happen just for the American market. If it's continue higher right from here, it would be a disaster sign for this economy, unfortunately, and something very bad will be waiting from the next stops if they will be reached. I keep my bearish opinion for a very long run. It does not mean we cannot see double tops or new highs for each of the indices, but the monthly chart screaming, be careful. It's screaming there. Okay, that's pretty much all about the indices. That's all I have to say here. Be very, very careful. Very, very careful. The crash down could start any moment. Okay, and yes, it could go for double top. Yes, it could go for new high. But this divergence is a very, very, very bad sign for the U.S. economy. Oil. Are you ready for a rise up? Oil broke this monster trend line on the weekly chart, as you can see here, and now it will have to break above the spike trend line. Okay, right here, above the spike trend line. It has to break it first of all. It created a Marubozu on a weekly chart, and it broke this resistance without even retesting that. We might see a pullback first of all, and this could be pretty impressive pullback as it is playing around the extreme on weekly and daily. On the 4-hour chart there is a beautiful divergence, which means this could be a top right here, and according to the weekly trend line we could see a beginning of a down move. But as long as oil will now hold above 98.99, I think oil is very, very able to go all the way back to 110 or even 115. If you take a look on a monthly chart, this could be a monster triangle break. This could take us all the way to the last highs, or maybe even next highs. Okay, so as long as 98 is holding, every pullback from to the down is an opportunity to buy. This is my opinion for this week about the oil. That would be all, friends, for this week. Thank you very much for watching this video. Just one last thing. On the previous week I am proudly published my second book on Amazon. Here it is, as you can see. It's called Profitable Trading Mind. It's all about trading psychology. All about trading psychology. I suggest here, actually, well, first of all, I talk here about all the things that no one talked before. Okay, I put all the cards on the table and admit all the psychology things we are going through and offered here solutions. Okay, so that's pretty much all I wanted to say. I'm proud that Amazon accepted my second book. I hope you will enjoy it, and if you have it and enjoy it, please take a few minutes to write down some comment. It's very important to me, and I appreciate your help. And just one last request. On the previous week I asked from you, if you have some time, please prepare a video with testimonial about the weekly reviews. Many of you sent, and thank you so much for that. As you know, I want to create my daily reviews place as well. I need your help here. The more testimonials we will have on a video short, 1, 2, 3 minutes, as much as you can, just explaining what the weekly reviews are for you, how they help, if you enjoy it, if you love them, things like that. Just talk honest, okay? Don't try to convince no one. Just talk honest what you have to say. That's most important to me. To have your real honest view and to share it with everyone. So if you have some time and you want to help, please do. I will really appreciate it, and just send it to my email, vladimir.ribakov@gmail.com. That's all. I wish you a wonderful week and good trading. Thank you for your time once again. Yours, Vladimir.